Thank you very much, and thank you for getting up this morning to join us for a very important and I think insightful view of the energy transition and ESG and the future of energy, really the keynote of this conference. As mentioned, I'm Pierre. I'm the Executive Director of the Tulane Energy Institute. I have the responsibility to teach undergraduates in our Energy Certificate Program and Masters of Management and Energy students in the graduate program. But I'm very pleased to bring you a fireside chat with Dr. Aniket Shah. Aniket is Managing Director and Global Head of Sustainability and Transition Research at Jefferies Group, LLC. In this role, he leads a team of analysts and provides research and advisory efforts for investors, corporates, and sovereigns on their energy transition and sustainable efforts. He also leads the firm's Washington strategy efforts, which has kept you pretty busy, obviously, for the last couple of weeks, yeah. For sure. He and his team are ranked #1 in Institutional Investor and Asia Money Brokers poll for ESG research in the US, Europe, Japan, and Australia. So we're going to get into a worldwide view in a minute as well. Now, Aniket, I felt like I just read a disclosure statement for a stock recommendation. So my first question to you is, what is it that you really do? And what does Jefferies do? And how is this important to this discussion?
Absolutely, Pierre. Well, first of all, thank you very much for having me, and thank you all for coming this morning. Tulane plays a very special role in my heart because 14 years ago, I did my first project in this topic at Tulane University, and we can talk about that later. So I had to accept this invitation. I'm so grateful for the invite, and I'm also very grateful to my friend Bill Marco, who's in the audience here, who's a wonderful colleague of mine at Jefferies and a great friend and a great leader here at Tulane. So what does Jefferies do and what do I do? It's a good question. I wonder that myself sometimes. Jefferies is an investment bank. What do investment banks do? Investment banks basically sit in between those who have capital, meaning investors, right, and those who need capital, meaning companies, sovereigns, and other risk takers in the world. Okay. And those who have capital, meaning the investment community, are increasingly interested in the risks and the opportunities presented by the energy transition. They're asking themselves, well, hold on, should I own stock in Exxon? Is Exxon actually worth $500 billion? Or if the world goes down a rapid decarbonization path, maybe Exxon isn't worth that much, so should I own that stock? So those types of questions investors are trying to answer, and our team goes and tries to help them. Similarly, on the corporate side, our corporate clients are asking, hey, we want to do a direct air capture project. We're a group of scientists coming out of MIT. We have a really interesting technology, and we need capital. Can you at Jefferies help us raise capital? And Jefferies as a firm goes out into the market and goes to different investors and tries to get that capital. And our job is to help the corporate figure out, this is the type of capital you need, this is from whom you should get it, and then we go and get that on their behalf. In all of those discussions, whether it's the investor who's trying to invest money, or the company or the sovereign who's trying to raise money, the energy transition has become an absolutely essential risk and opportunity. And so Jefferies decided around 4 years ago to build a team, which I lead, to be the advisors to both communities and help them better understand one another so that everyone can make money and can move this space forward. And so yeah, that's what Jefferies does, that's what we do, and it's a whole heck of a lot of fun. So.
Well, we all have some view of people that speak truth to power, but what I heard is that Jefferies has you to speak truth to money.
Indeed, indeed.
And how does that go? What is the activity like? What is the interest level? How do they react?
When I joined Jefferies 4 years ago, I think a lot of my colleagues were a little nervous. They said, who is this guy that we hired who's going to be lecturing the world on climate change and how we need to turn off oil and gas tomorrow and that we need to, overnight become cavemen and women. And on June 2nd, 2021, I'm going to read this to you. When we launched our team at Jefferies, I wrote a note that went out to 17,000 people, basically the CIOs and the CEOs of the largest investment firms in the world. And I said, global net zero efforts need more practicality. I'm reading from the note. I said, a correction to net zero is coming. We see the possibility of a major correction/reversal to the net zero by 2050 momentum as investors begin to appreciate the challenges of rapid decarbonization. And when I said that, I think my colleagues, Bill and the team in Houston were like, really? This ESG guy is talking pragmatism? That's interesting. And the ESG community said, who is this guy? Why are you talking about the challenges to decarbonization? We're going to net zero tomorrow. And so to answer your question, I have always been fact-based. I've always been trying to find common ground between people. It's a part of my philosophy as a human being. My father always recited a quote to me, which is ascribed to Reagan, but it wasn't Reagan, which is that I rather look at somebody as my 1% friend as opposed to my 99% enemy. And all that I mean is you try to find the areas of commonality, and that's what I try to do in the investment industry. It says energy transition is happening. It is happening much slower than we need to get to net zero by 2050, but it is happening. So you would be wrong if you said the energy transition isn't happening.
Okay.
You would be wrong to say, though, that it's happening overnight. And I am that person, and my team is that group that is trying to help people understand fact, science, uncertainties, and within all of that, make good decisions. And the good news is that there's an enormous market for that. There's an enormous market for fact-based discussions right now, and that means we get to talk to pretty much every investor and company in the world.
That's amazing. And that brings, your coming here brings all of that body of knowledge to share with us, and you must consume a tremendous amount of perspective to be able to synthesize that into something that is be able to communicate you make your point about the pragmatic approach to what this is looking like for us in the future.
Indeed.
So that's a great perspective. So one more, personal question, if I might. Yeah. And you mentioned your father, and I'd love to maybe talk about that later too. But so, what drew you to? You mentioned that you had some initiatives in here at Tulane. It said, "Hey, I want to do this." What drew you to this? How do you end up in this role?
Yeah.
If I have a student that wants to be you,
sure.
Where do they start?
So I'll just give the 90-second version, which is I was a Yale undergrad and graduated in 2009, and the only job I could get out of Yale was an investment banking analyst job at Goldman Sachs. It was weird. And for those of you who know the financial world, that is probably the most prestigious job that a 21-year-old kid can get out of school, by far, is being an analyst at Goldman in investment banking. And I had summered there in 2008, days before the financial crisis began. I actually got my offer from Gary Cohn, who called me up and said in September of 2008, the world is blowing up, but you were the top analyst at Goldman, we want you to join. But I hated my time there. I couldn't stand working 120 hours a week and changing PowerPoint colors because my boss wanted me to make the color just perfect for him. And so I started at Goldman because it was the only job I could get. And 5 months into my job, I was unhappy, sort of losing touch with myself, and I wrote an email to a very prominent economist at Columbia University named Jefferies Sachs, who ran the Earth Institute at the time. And I wrote to him and I said, "Dear Professor Sachs, my name is Aniket Shah. I'm 22 years old. I just graduated from college. I've read everything you've written. I'd love to meet you and get your advice." And not thinking he would write back. And he wrote back and he said, "Come and meet me." So I went to his office. This is a guy who advises presidents and CEOs and heads of state. And long story short, he said, why don't you come work with me as my research assistant,
Wow.
and I'll pay you $41,000 a year. And my first year salary at Goldman would have been probably 4 times that. So I called up my parents and I said, I'm leaving Goldman
That went well.
to go work at the Earth Institute at Columbia with this academic. And my parents thought my mom thought I was crazy. My dad said, go for it. My mom thought I was a little nuts. And all of this is to say, Jeff, then I was 22, and he said, your first project is to organize a conference at Tulane University with Mitch Landrieu,
Wow.
Mary Landrieu, the president of Tulane, the president of LSU, the governors of all the southern states of the U.S., and the presidents of all the Caribbean countries in the Caribbean to talk about climate resilience in the Gulf Coast and the Caribbean Basin. And here in 2010, we organized a 300-person conference just in another hall. It might have been this hall, by the way, I don't know. And I was the 23-year-old kid just making sure that everyone's documents were the right ones. So, and that then began a life of exploration, because I was working at the Earth Institute trying to understand economics and the environment. And to answer your question, Pierre, once you start thinking about this question of how does our economic system and our climate system, how do they live together? Can they be reconciled? How can money and finance and trade, which is a day-by-day, hour-by-hour topic, be aligned with tens of thousands of years of climatic evolution and undulations? Once you start thinking about that, you honestly can't think about anything else. It's just the most fascinating topic. What I didn't know is that there would be a job for me 14 years later at a major Wall Street bank working on this.
Right.
I thought that I would be a research scientist at the World Bank or at a university. But the good news is that the whole world now is trying to figure this topic out.
Right.
That wasn't the case 15 years ago. We're trying to think about it, and that means that there are a lot of roles for people in the audience who want to work on this. There's a lot of ways to get involved.
Oh,
So
that's
how I
great.
did it,
It's
yeah.
very encouraging as well. And, I do think when students come and are looking for these kinds of opportunities, and can you basically match up your passion
Indeed.
and make an impact, I think that's a great perspective to leave with everybody here. So we're going to delve now into 2 sort of segments of what you do.
Yeah.
Because as I appreciate, and those that might understand a bit about the investment banking world, that you're above the wall, meaning that you can have a view inside the corporates and the companies and their strategies and advise them, as well as the investors, and you're advising them on, and getting the feedback on maybe what they think, and where's the money flow. So we're going to kind of get into both of those topics, as well, of course. We can't have a conversation about the future of energy without your perspective on policy.
Absolutely.
And what in the world is going to happen in the next 4 years. So we're going to get there. So those 3 topics. So if you have any questions for Aniket, remember there are QR codes available. We're going to collect those questions, and we'd love to leave plenty of time, honestly, because we want to hear your feedback on this a wide-ranging topic. But so let's first talk a little bit about geography. You mentioned, or I noted, that you're really well respected in the U.S., Europe, Japan, Australia. So this initiative for, and I'm going to use ESG and sustainability, maybe incorrectly, but a little interchangeably. Sure. We could say that initiated in Europe, the emphasis from investors and corporate strategies began to move west. What is your feel now of where Europe is in their initiatives, collectively, investors, corporates, and the movement towards the West?
Yeah, it's a really good question, because so much of it depends on how you define what is this.
Okay.
What is the topic we're talking about? So let's just look at each of the major economic regions of the world, and we'll start with Europe because that's where the question started. The entire European society is built towards multiple outcomes.
Okay.
economic growth, yes, but also a stakeholder-oriented form of capitalism. And we were speaking about this a little bit at dinner last night. You know, in Europe, the corporate structure is very different than it is here in the United States. Companies there are much more mindful of labor issues. In Germany, there are labor unions that sit on boards of publicly listed companies. There's a lot more disclosure for various stakeholders. Companies have to disclose a lot more because the European mindset is that, yes, the economy matters, but lifestyle, quality of life, environmental sustainability also matters, okay? And what that has meant is that a lot of these ESG principles found a home in Europe from the beginning because it so well aligns with the European zeitgeist, which existed, frankly, even before the ESG momentum was there. It is just part of society there. They have 6 months to 2 years of maternity leave. People take all of July and August off. They hardly work 30 hours a week in France. I mean, it's just a totally different orientation of an economy. So that's Europe. The United States is not like that. The United States is prototypical capitalism, right? We are a shareholder-oriented, returns-only approach to running a financial economy. We have much lower wages, minimum wage standards. So in America, the minimum wage is $7.25. That is unimaginable in Europe. We have much lower corporate taxes. We have much lower tax take here. We have much lower disclosures for companies because here the economy is really driven towards capital and towards returns on capital. Now, why do I say this when it comes to the energy transition? I'm going to talk about China in a second. The Europeans are regulating the energy transition. They're regulating it through codifying net zero by 2050 into law, which the European Union has done. They have an emissions trading scheme that has put now a close to $100 per ton carbon price on 60% of emissions. And yes, there's blowback. You look at the yellow vest movement in France and so on and so forth. But the European governments are regulating and legislating towards net zero, knowing that there are implications of it. Okay. The U.S. is innovating. The U.S. is the innovation hub when it comes to the energy transition. There are 5 times more climate tech companies in the United States than all of Europe put together. 5 times, even though U.S. and Europe are roughly the same size in terms of the economy. Because we have wonderful research universities here, we have a venture capital industry that is extremely vibrant, and the positive side of that capitalistic orientation is we're risk takers. So where is direct air capture taking off? Here. Where are there some very exciting nuclear fusion companies, which Andrew Holland, my dear friend who runs the Fusion Industry Association, will speak about later? Where is that happening? A lot here in the United States. So is America behind Europe on ESG? No, we have a different approach here. Now let's talk about China, because nobody talks about China. It's sort of uncomfortable. For some reason in America in the last few years, it's been uncomfortable to talk about China. I don't know why that is. It's a very weird thing about our country that they are our biggest economic competitor in the world. Our generals are talking about fighting a hot war with them in the next few years, but we can't even talk about it. We don't even talk about it. It's amazing. Even in financial circles, no one talks about China as if they don't exist. But let me tell you, folks, they are the biggest player when it comes to the energy transition, by far. They are the most advanced and the largest players on solar, on wind, on batteries, on electric vehicles, on critical minerals, on all of the early technologies that are needed to advance on those. And that is not because they are generous souls in China. Like we are, it's not as if we're generous souls. They're not either. This is in their economic best interest because they are a net fossil fuel importer and they rather not be importing fossil fuels from the rest of the world and have control of their own energy. And by the way, export
their technology to the rest of the world. So I would say that instead of saying, which is the common refrain that ESG, and I think, yes, ESG in the regulatory sense of disclosures around emissions and all of that kind of stuff is a European attitude towards this. But I think it would be completely wrong if we were to say that the United States is not a player on the transition. It's a completely wrong approach, and we can talk about what President Trump may mean for that going forward. And I would ask everyone in the room to spend more time in China and, frankly, in Japan and India, too. And one of the pieces of advice I'm giving our clients is go to your boss, ask for a plane ticket, spend 10 days in Beijing, spend 1 week in New Delhi, spend 1 week in Tokyo, and come back. You will have a much better understanding of the energy transition if you spent a month in Asia than if you just spend all your time sitting in the US and certainly going in Europe, because Europe is basically becoming less and less relevant. And I'll just end with an important data point because we need to be fact-based here. Europe has less CO2 emissions than India. Just think about that. But if you go into a room of sophisticated operators, of investors and CEOs, they can tell you everything about Europe. They'll tell you every detail about European regulation and where Germany's going and where France is going, where the UK is going. But they won't even be able to tell you the 3 main cities in India. They would never have even heard of the major companies in India. And so we need to have a global orientation to this topic. And I'll just end this question by saying, you have seen this U.S. centrism come out in the last 10 days since the election of President Trump, where people say, oh my God, climate is just done because President Trump's election. And then I remind them, I say, but the U.S. is 10% of CO2 emissions. And they say, huh? Really? I didn't know that. And then they say, oh, yeah, but, Aniket, but if Trump takes us out of Paris, then nobody in the world's going to do anything on climate. And I say, are you kidding me? You think the Chinese are going to slow down because the U.S. is withdrawing from Paris? China is going to triple their speed. They're going to put their foot on the accelerator because their competitor has left the stage.
Right.
So all of this is just to say, I'm glad you asked the question about geography, because a global orientation is needed. And you actually lead to different corporate strategy, because my job is to be a corporate strategist and an investment strategist. So what I'm saying to our clients is think outside of just a few regions at a moment like this, and you'll find more opportunities.
There we go. So get on a plane.
Get on a plane, indeed.
Travel. But also, though, you make reference to Europe, and I just wanted to let you know that if you want to get July and August off, you could also join academics.
Why do you think I'm here?
And you could leave New Orleans in the hottest part of the summer as well. Okay, well, so with that geography overlay, now in the context of the election, you're also interacting with the money flow. And as I mentioned at the outset, you're speaking truth to money. So there has been an influx of investments, capital to funds that are focused on ESG, sustainability, energy transition. So this complex question, I'll open it up, but you can, address where are those funds looking to invest? Now, I'm obviously talking about more of your public funds than you talked about venture capital earlier, but what is going to happen with the fund flows now, given the election?
So again, this is why the world is just so interesting. There may be folks in the audience who have this simple heuristic in your mind that Democrat equals good for clean energy equals buy clean energy stocks. Republican equals good for oil and gas equals buy oil and gas stocks, right? That would be a totally reasonable heuristic that an educated, well-informed person would have. And if you had invested in the public equity markets with that philosophy, you would be unemployed right now. You would be on the street because you would have lost your shirt over the last 15 years. 100%. It's amazing when you look at data. Because it's under Republican presidents, going all the way back to Bush Jr., that clean energy stocks have outperformed oil and gas stocks, including Trump first administration. And under Democratic presidents, oil and gas has significantly outperformed clean energy stocks, including President Biden, including President Obama. And this is why I always say, we talked about this at dinner last night, that the stock market is a dangerous place from which to try to understand the world. It's the one way from which, and I stole that line from John le Carré, who was a spy writer who wrote, "A desk is a dangerous place from which to see the world," and I agree with that too. So to the younger folks in the room, don't live behind a desk, especially for the next few years. Go out, see the world, talk to people, learn. Don't just sit, and certainly don't live in front of your phone. Throw this thing away and your IQ will go up by 20 points, believe me. So the first point I would say is, for the purposes of the equity markets and public equity markets, there is no historical evidence at all to suggest that a Republican president is bad for owning clean energy stocks. Because the thing that actually drives the relative performance of clean energy versus fossil fuels is clean energy is driven largely by interest rates, which is a question around the Fed and how the Fed is controlling the cost of capital, because clean energy is a CapEx-intensive process. So lower financing costs means the net present value of future earnings increases. And the performance of oil and gas stocks is largely driven by one thing, which is the oil price. And the oil price is determined by many things outside of who is the US president. And so the first point I would make about the investor is one has to remember that this relationship is not clear-cut at all. The second point I would make is that when we're talking about clean energy in the real economy versus the equity markets or the returns markets, it's a completely different story. And this is also going to be maybe news to some of the younger folks in the room, which is that it is also possible that the energy transition accelerates in the real economy, that we all use more solar and wind and batteries and EVs and hydrogen, and that the stocks don't do well and that you don't get excess returns. That is also a reasonable outcome. And inversely, that fossil fuel demand starts petering out earlier than anticipated, and owning oil and gas stocks is a great investment. Because these companies basically give back a lot of money, like they're doing now, in buybacks and dividends, and so you get a lot of cash as an investor. And so all of this is to say that when you are in your seat as a financial professional, you are answering a very different question than whether or not a technology is taking off in the real economy. You are looking at margins, you're looking at earnings growth, you're looking at profitability, you're looking at business models, etc. And so what does all this mean? I think that the Trump election is obviously not a good thing for clean energy installation in the U.S. economy. Obviously. I mean, it would be naive for me to sit here and be like, oh yeah, Trump's great for solar. At best, he is the same as Biden for solar, and at worst, he's worse, right? On solar, wind, on EV tax credits, the Trump crowd has already come out and said they're going to roll that back. We knew that, et cetera, et cetera. So, but I don't think if we were sitting here in 4 years from now that the global energy transition will have slowed down. In fact, I am willing to bet every dollar in my wallet that total amount of investment in low carbon globally, in the real economy and capital formation, is going to continue to accelerate. Just to give you a number on that, in 2023, that was $2 trillion. There was $2 trillion invested in the real economy last year in low carbon. That number was $150 billion when I started my career. So that number has gone up by 13x. And so, again, this is why what you do, Pierre, is so important because you teach about economics, policy, and energy. And within economics, you teach about finance because you're such a successful financial professional.
Thank you.
When we talk about finance, it's a different world than the energy world, which is a different world than the political world, and they all overlap, but you have to understand each system on its own and be able to switch from one to the other. And so I say to the ESG crowd, when you wake up in the morning, you have to ask yourself, what are you optimizing for? And in your day job, we are all thinking about making money. In the nights and weekends, we could get very excited about there being more solar panels in the world. But when you sit at Wellington or Fidelity or Jefferies or Blackstone or KKR, the only thing on your mind by law is about how do you optimize returns. And that is it's a mental leap that people, the ESG crowd it's hard for them to do, but I'm trying to push them there. And I'm trying to give them data, I'm trying to give them evidence. So Trump, net, not good for renewables, not good for the transition in the US at best. At worst, he could really slow things down here. He really could. But globally, the world is moving ahead on these topics, and each country is going to go the way they want to based on their own incentives, and we can talk about that as well.
Excellent. And as a reminder, I'm going to ask maybe one or two more at the most, and then we're going to turn it back to you. So use the QR code, send your questions, and we've spoken fairly high level, but feel free to get pretty detailed, because one of the things I've come to learn is that that Aniket knows a lot about a lot, so we can get deep into the details. So maybe in that vein, excuse me. Let's talk about you advise the corporates also.
Indeed.
So Aniket, they now are wondering about their strategies, and I know that you took a sustainability roadshow out in September, and they were beginning to ask about the election. And I see your note that I read that said, maybe some feedback was that sustainability strategies are incorporated into corporate decision-making and investment decisions. And then, if I'm interpreting this right, that some view that the election isn't going to change so much. So maybe, in the respect of even the CEO of Exxon said, drill, baby, drill doesn't affect their activity levels. But then, you also have this perspective of what does a startup renewable offshore wind company do when they're concerned about the policy change?
Sure.
What are corporates asking you right now, and how do you see them reacting to the administration change at the moment?
When you think about a company, you have to break it down into the different groups of actors that influence what a company does. And if I had to break that down into just a few groups, they are the following. So number one, it's the investors in the company, the capital providers, which we've spoken about, but we can talk about that a little bit more. Number two, it's the customers, the people who are buying the products that a company sells. Number three, it's the employees who work at a company and all the demands that they might have. And number four, it's the regulators and the political environment within which they operate. That's my simple heuristic when I look at a company, and I think about their strategy. I say, let me look at it from the four groups of people that really drive corporate activity. So let's talk about them one by one with regards to the election and just more generally. Let's talk about the financial providers. Last year, 14% of all debt issued globally was green or sustainable bonds. This is the green bond market, sustainability-linked loans, et cetera, et cetera, et cetera. 13%. That number 7 years ago was 3%. That is a simple heuristic to say that the one form of financial providers, i.e. debt providers to companies, because remember, companies don't really issue a lot of stock. In fact, companies are net providers of capital to the capital markets in terms of through buybacks and dividends. So you have to look at the debt markets more. More and more of the debt providers are saying, you know what? We want you to continue moving into this green or sustainable thing. And we can talk about the green loans and the green bond market if that's of interest. Why are they doing that? Because the financial providers are getting more and more nervous about risks associated with the transition. They are getting regulated by central banks all around the world who are pushing banks to care more about sustainability. We can talk about that too. The central banking community is playing a very, very heavy hand around transition. But the providers of capital are not moving away from looking at the risks and opportunities related to the transition. So that's one group of people. Now let's talk about customers, the customers of a company. Of course, for every company, their customers are different. What do we know about customers, the consumer class or corporate customers? We know individual customers, people like us in the audience, we generally don't like paying a green premium for anything. We know that. Let's be honest with ourselves, please. Some honesty helps. We don't like paying more for something, especially when no one's watching. We can say to someone who asks a survey, would you pay an extra $1 for something green? And you say, yeah, for sure, 100%, I'm such a good guy. But when no one's watching and you're in the checkout line at the grocery store, or when you're buying a t-shirt, you're buying the cheapest thing that you can. And so I've never believed the customer green premium argument. However, corporate customers are saying to companies in the supply chain, we want to decarbonize our entire value chain, and so we're willing to buy some of the greener things. So BMW, Volvo, a lot of the car companies are saying, for the steel that we purchase, we're willing to pay a little bit extra because we want to be able to say to our customers that we have a more decarbonized car, because for certain high-end luxury items, the customer does care about this. Maybe small, but that's a question to answer. So now we've talked about customers. No large green premium, but maybe in certain communities there is. Okay. Employees. This is really interesting. I was talking hand over heart to a Fortune 5 CEO around a year ago. Our colleagues in banking somehow got a meeting with the CEO that we don't usually get to talk to, and he wanted to talk to me about all these topics. And before I did a whole prep deck with my team, and I found out this team was doing everything they could. This company was doing everything one could do about sustainability. They had green loans, green bonds, they had a science-based target, they disclosed all this, and I get on the call with the CEO, and I said, sir, it's just amazing what you're doing. Wow. You're doing all of this stuff. Your shareholders must have really pushed you hard. And he said to me, Aniket, I've been CEO of this company for 20 years. Not a single shareholder has ever asked me to do any of this. I said, really? Because in my mindset, it was the shareholders that were pushing companies to do this. And he said to me, it's the employees.
Wow.
He said, I run a company with 300,000 workers, and I can't get the next generation of executive, the 35 to 45-year-old, people like me who want to go on and become CEOs and, blah, 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 that era in your career when you're really trying to make that next level. He said, I couldn't get them to work with me if I am not showing that we are doing this, again, that we are future-proofing our business. It is not because we are magnanimous people, but it's an indication to that next level of executive that we're thinking about the future. So does the employee care about these topics? I think that continues. And now let's talk about the last thing about policy and regulation. This is bad news for clean tech, because when I spend time with clean tech companies, so much of the business model for a direct air capture company, for a hydrogen company, for a lot of solar companies, was government subsidization. Right? That was a big part of the business model. That's how they were going to get the money to scale up and then become commercial, is that the DOE's loan program office was going to give them some money, and they were going to get 45Q tax credits and 45V tax credits through the IRA and blah, blah, blah. There is now a big question mark around that in a Trump administration, right? Around whether those tax credits continue. So I don't have a simple answer to your question of will corporates still care about these topics going forward. What I'm trying to give people in the audience is a framework and to say when you're looking at a company, because you have to do this company by company, sector by sector, and you have to ask for that company, look at their financial providers, look at their customers, look at their employees, and look at the policy and regulatory environment, and take pen to paper, put some numbers together, and ask, is sustainability going to be impacted because of a Trump election? And in some instances, the answer is yes. Okay. In some instances, the answer is no. And that's why I get paid, and that's why my team gets paid, is we answer those questions for our clients.
Right. Tremendous.
Yeah.
Well, I can keep going, and we can go deeper down this rabbit hole. But let me check in the back if you've got a question or two.
We have a lot of great questions.
Okay.
We won't have time to get to them all. I'll start with this one. Jeff Sachs was an architect of the economic policies known as shock therapy in post-communist Eastern Europe, but in energy we're cautioned that transitions happen very slowly. But might that be wrong? Could disruptive technology or disruptive policy amount to shock therapy that could fundamentally change the speed of the energy transition?
See, I told you that was a pretty insightful group.
Whoever
here.
asked that question, please come to see me afterwards, because I've never, as a colleague, a mentee, a co-teacher with Jeff, I've never heard somebody link shock therapy in Russia and Poland with shock therapy of the energy transition. So that's truly a creative question. So yeah, let's talk about disruptive technologies for a second. Let me give you some numbers. The International Energy Agency, which many of you in the room may be critical of, but they are the world's most sophisticated analysts of energy. You may disagree about their forecast, but they have a lot of smart people trying to understand what's going on right now. They every year put out a report to ask what percentage of the technologies that are needed to get to net zero are at different, what they call TRLs. Yeah, technology readiness levels, which of course Pierre
thank you, NASA.
knows very well. Thank you, NASA, indeed, it comes from the United States. The number of technologies that are not yet proven, that are, in other words, not yet commercial, has shrunk in the last 4 years from 50% to around 30% in the most recent IEA report. So the first answer to your question is that deep technological progress means that we are getting closer and closer to a point where we actually have the technologies to solve the transition, which 10 years ago we certainly didn't have. Even 3-4 years ago we didn't have for a lot. And now we have more and more of it, therefore the gap is lower. So that's point number one. So we are making a lot of movement in there, and I believe that all of this positive background music that people like me have provided for energy transition have really inspired scientists, engineers, and students. It all starts with students to go and study these topics so that there's more scientific progress being made, and so I think we're moving in that direction. So that's point number one. Point number two about disruption. It is truly amazing how naive we all are about disruptive change. And by the way, it's a part of the mental models that we as humans have. We actually are unable to think about exponential progress. It's like a shortcoming of how the brain functions. We don't know, like the brain doesn't know how to think about 2 times 2 times 2 times 2 times 2. As opposed to 2 plus 2 plus 2 plus 2. We only think linearly. It's again, like you can talk to psychologists about this and they'll explain to you why that's the case. And so in all sorts of issues of our economic system, we have not been able to think of step function shifts. It's why people like Paul Krugman, a Nobel laureate economist 20 years ago, said that the internet will not be a big deal. By the way, he wrote that in the New York Times. Can you imagine? Not to criticize him, but it's just even a Nobel laureate is unable to understand these things. Again, my friend Andrew is going to talk about a step function change in nuclear fusion, and he has been so bravely and valiantly telling the world, look, folks, there's stuff happening here that could change everything. And we were very lucky to host him and his whole organization for a conference where I learned a lot more of the great work that he's doing on this. And so the second point I would say is that it is a mental gap that we have. We're unable to think about it with financial crises. We were unable to think about it. This was true in 2006-07. The greatest economists in the world couldn't think that we were coming close, including Ben Bernanke. Ben Bernanke was saying in 07-08, things are looking fine. Jake's now, and not just to criticize Republicans, let me criticize Democrats. Jake Sullivan, the National Security Advisor, a few weeks before October 7th said, the Middle East is the most peaceful that it's been in decades. This was Jake Sullivan, our brilliant national security advisor. And so we are unable to think about how quickly things can change, and things can change very quickly. So I hope I've proven that. That's point number 2. Point number 3 is when we think about transition and technological change, our advice at Jefferies to our investor clients and our corporate clients is you need to allocate 1% of your portfolio into early stage disruptive climate tech on the investment side. So if you are CalPERS or Norgis or BlackRock or whomever, have more of your capital going into that. And similarly for corporates, our one piece of very practical advice to large incumbent companies is set up a corporate venture arm. Mm-hmm. And of course the Chevrons and Shells and BPs have had that, but we're saying to every company, you need to have a corporate venture arm. Not because you're going to make a lot of money in those corporate venture investments, but because you are going to learn by being in it. That's the only way you can learn is by having your hands in it, seeing it, going to the conferences, talking to the scientists. And if you have money at risk, you're going to actually learn. Otherwise, it's just academic. Wow. And so we've actually been very practical in saying this, and it's very interesting because a lot of our corporate clients, I was with the CEO of one of the largest mining companies, and I wrote a note recently about his corporate venture arm, and the CEO of one of the largest mining companies in the world called me up, and he said, Aniket, I've never seen a sell-side analyst talk about our corporate venture arm, even though I've been telling the street that this is one of our strategic initiatives as a firm. Mm-hmm. But the financial community doesn't spend any time thinking about it because it's such a small percentage of their total CapEx. And so, yes, to answer the great question, disruptive technology, it is happening. We have mental models that block us from thinking about it more. And the practical advice is to go and set up a part of your portfolio that is actually in this. And I'll just end by this question with a real story, which is I had a guy on my team go to a conference last week called the Verge Conference in California on climate tech. All right? And this was 2 weeks ago, before the election. There were 6,000 people, 6,000 people at a U.S. climate tech conference. Wow. 6,000. 95% of them Americans, American companies, American investors. So is ESG dead in America? Are we behind Europe? No, we have a different approach, but you need to go to the conferences. You need to talk to the companies. You need to make that part of your mental model. And it's not happening right now. And because, frankly, we need more creative people. And what I'll say, because I want to bring your amazing career and my friend Bill Marco's amazing career into this, I think one of the things I've learned in my career, and I'm nowhere as seasoned as the two of you, even though I'm losing my hair. Your hair is gray. I'm losing mine. But one of the things I've learned is financial people need to spend time in industry, and actually should start their careers in industry. I should have started my career in industry like the two of you did, because you actually understand the world, because you actually do things in industry. Financial people, we are good at talking, and we're good at spreadsheets, and we can make a nice presentation and this and that. And by the way, you add finance and academic, then you're really good at those things. So you really can't do anything. But working in industry and thinking about these questions from industry allows you to think about disruptive technology. Because Exxon's been investing in disruptive technology through their labs, through their research labs for 50 years. And so that's the other point, just to bring that part in, is if you want to understand this for the younger folks in the room who are thinking about where you want to work, maybe you don't want to work at Jefferies, although Bill and I would love to welcome you to our firm. Maybe you should go and work at Exxon, or go work at BP, or go work at Orsted, or go work at a real industrial company, and you'll learn how these things happen.
Oh, that's great. Great advice. What else is in the back? And do we have a number of other perspectives?
Sure. Can you discuss smaller developing countries and the energy transition? Is emphasis on decarbonization displacing emphasis on poverty and hunger?
Yeah,
That's
an equity issue.
Wonderful, wonderful question. There's so much to say about this. If climate change is as bad as many in the climate science community are fearing that it may be, then the greatest injustice of it will be that it will impact the countries that least contributed to the problem. Yeah. It is one of these really sick parts of how, if you believe in God, if you believe in the universe, whatever, of how the world has been constructed, that those who have contributed the least to this problem are already today getting hurt the most from it. And if things accelerate, which some worry about, and we should talk about tipping points in the climate system, we should talk about that, because it's also one of these non-linear changes that could happen. The people that will get affected the most are the poorest of the poor, who live in the poorest parts of the world. So that's just one opening salvo. The second thing I would say about low-income countries is that they're not thinking about an energy transition right now. They're thinking about energy, not transition. They don't have any energy. By the way, just to give you a number, because we should be fact-based here, the per capita CO2 emissions of the average Ethiopian is 1 ton of CO2 per year. My flight, New York, New Orleans, New York, in economy class, thank you, Jefferies, was 2 tons of CO2. So a flight that I do, without even thinking, I do a flight like this every 3 days, I emitted more than the average Ethiopian emits in an entire year. Think about that. And so they're not thinking about decarbonizing, they're thinking about energy. Now, that doesn't necessarily mean they're thinking about fossil energy. They're thinking about energy. Now let's talk about fossil versus non. They meaning low-income and middle-income countries, will do only what is in their economic best interest, just like we only do what's in our economic best interest. So, if you can make low carbon cheaper than fossil, they'll say, fine. You want us to do solar plus storage in Algeria? Happy to, but it better be cheaper than me doing natural gas. Thank you very much. And if it's not, then go fly a kite. All right? And so this is what Gates has been talking about. This is what people like me have been talking about, which is our job has to be making these energy sources cheaper for countries to go down that path, not because they're magnanimous, not because they care, not because of but because it is the best option for them. And to get there, we're getting closer to that. We're not there yet. We're getting closer to it, though, because the cost of solar PV has come down by a factor of 100,000 in the last 25 years. Amazing. So we're moving in that direction, but we're not there yet. The final point I would say about low-income countries. When you think about climate, you have to think about it really in three buckets as an analyst, as an investor, et cetera. You have to think about it as mitigation, you have to think about it as adaptation, and then you have to think about it as intervention. Mitigation means lowering CO2 emissions. That's solar, wind, batteries, energy efficiency, all of that. Adaptation is how do we adapt to the impacts of climate that are around us already? And intervention is what are the things that we can do to intervene in the atmosphere to remove CO2, even to do things like solar radiation modification, which I've written about boldly, in order to buy us more time. But I bring this up because the adaptation topic is absolutely essential for low-income countries. They say, we've had a 1 in 100-year drought every 5 years. We don't have time to think about, how to bring down the cost of solar. We need to adapt to this right now. We need water desalination plants. We need district cooling facilities. India's Middle East is now getting so warm that literally we're at the limit of human survivability. It's called the wet bulb temperature limit, which we are reaching there. So they're saying, look, folks, we need to just survive. We need to adapt. We need to be resilient, and we need investment dollars for that. And so when you go to low-income and middle-income countries, you hear discussions of adaptation there a lot more than you see in the high-income world. We, of course, need to adapt too, but it's much more salient there.
Very pertinent to the discussion. So we just have 2 minutes. Is there a yes/no question back there other than can I have a job?
I don't see a yes/no question. Why don't we just do one more? Do you see an uptick in the voluntary carbon offset market in the United States with government subsidies at risk?
Got it. Nice one.
Not really. I wish honestly that market would come to life, but I think it's been a bit of a black hole. Only $2 billion last year was transacted in the voluntary carbon markets out of $2 trillion, the number I gave you before, $2 trillion invested in low carbon globally. So it was 0.1%. So maybe at the margins you see more of that, maybe, but there are a lot of issues. Companies don't feel comfortable with it right now. And I would say, you know what, stay to the other bigger pools of capital, because a lot of smart people have tried to make the voluntary markets work, and I don't know. I'm not willing to throw in the towel, but for what it's worth, I spend very little amount of my time in that because it's just not a big money movement space.
Okay.
Maybe just a final thought, what I would say to, especially, and this is geared towards the students in the room, this is truly the most interesting, fascinating set of questions I think that exists in the world. It is one that you can bring every faculty to. You can bring a scientific mind, you can bring a financial mind, you can bring a corporate mind, you can bring an anthropological mind. There's so many different ways to touch this topic. But the advice that I would give everyone in this room is work hard. There's no substitution to hard work. I mean, it's truly. Look at the folks, me and my colleagues here on the stage and my friend Bill. I mean, these folks are doing this way past the point where they need to, and they're still at it because you need to put in the hours. You need to put in the hours. That's one. Number two is always be fact-based. Don't get caught up in narrative. I ask myself constantly, how am I wrong? How could I be thinking about this wrong? Why am I wrong? It's the neuroticism of a sell-sider. You know that. But you always have to pressure test your own mind. And if you stay on facts, there's actually a lot of common ground you can have with people. Believe me, my career is testament to it. You can find a lot of common ground. My closest colleague at Jefferies is a former Republican Senator, Bob Corker, who has become a great friend of mine because we talk and we find so much common ground because we're both trying to be fact-based in our work. So hard work, be fact-based. And the third thing I would say is find the one part of this topic, if you're interested in energy, find the one top part about it that you love and become an expert in it. Because there's so much generalist knowledge now in this space. Generalism, I don't think, is what's needed. I mean, you need a few generalists, for sure, but you need specialization because this is a multi-trillion-dollar industry right now. Even with Trump and all this stuff, it is a multi-trillion-dollar industry. And so you need to be, as a young person, if you're graduating with a master's or an undergrad or a law degree or whatever, you need to have a seat at the table. And you only have a seat at the table if you have specialist knowledge. If you get more senior and whatever, you can talk about these things pretty high level. But as you and I know, you and I can go into the details of any of this. But for the younger folks in the room, you have to start as a specialist. To find the one thing that you're really passionate about, that you're deeply engaged on, and learn everything about that. Learn everything about that, and then you'll always have a seat at the table, and you'll always get a job. And good luck, because it really is a wonderful way to spend your life.
Wow, so inspiring. So, big round of applause. Thank you for joining us.